The recent slump in BlackRock, Palantir, and Google has investors on edge. But is a turnaround on the horizon? Today we dive into the charts, dissect Elliott Wave structures, and analyze key technical signals to answer the big question: are these stocks bottoming out? Or is there more downside ahead? BlackRock, after a sharp drop, is institutional money preparing for a comeback? Palantir, AI hype meets a brutal sell-off. Will it find support or sink further? Google, tech giant under pressure. Oversold opportunity or warning sign? What do you think? Are we seeing the early signs of a major reversal, or are these stocks setting up for another leg down? Drop your thoughts in the comments. Let's break down the charts and track the next major move. And we start with BlackRock. So this is our long-term chart that we shared, well, back in October. And right now, this is our biggest perspective. So what we are seeing here is that BlackRock formed a very strong bearish engulfing in February. And right now, it's March, and it is confirming the potential move down. If it moves lower and closes March and April with another red candle, well, the move lower will almost be guaranteed. Now let's have a look at the candles. So what we are seeing here is quite disturbing as well. So three red candles were sitting right below the 200 days moving average, a freshly made 50 by 100 days moving average cross. Everything points down and the stock is not even oversold. If we look at the bigger frames, for example, like 8-day frame, which is closing tomorrow in 14 hours, so far for BlackRock, in order to reverse this, it would need a heck of a rally. I would say about at least 5% tomorrow. Let's see if it's possible. Well, it's possible, but the probability is probably very low at the moment. Now let's have a look at the bigger frames. This is the 15-day frame, which we were talking about just a couple of days ago. And I would like to say that this is a freshly made bearish cross for MACD. 15-day frame, 3 times bigger than the weekly, and the bearish MACD cross of the second highest magnitude. If we look at the previous one, which happened in 2021 and continued in 2022, BlackRock lost 48%, peaked through during this time. So far, it is moving down, and the loss, what is the loss so far? It's about 15-16%. Well, that's quite a room still open for this one. If we consider these crosses, and the implications would be somewhat comparable. And this is our chart, a very small but very effective one. So this was a double top that we spotted in February 12th and said that BlackRock has a good chance to hit 900 or even 800. So far, 900's already touched, and this is the first target. So we are seeing so far the moves, potential moves down, another 9% or so. But this is not a stop. So far, no reversal points. That's for BlackRock. And now, once we are here, let's take a quick look into financials, what we are seeing here. Tomorrow will be a strong closure, and we discussed this already previously. Then 15-day frame was somewhat bearish for Visa and MasterCard. Now they have a chance to increase their bearish odds by closing the 8-day frame tomorrow with big bearish candles. If we look at other ones, so Goldman Sachs is already formed a big bearish engulfing, and the 8-day frame will just form two two black crowds, potentially opening a room for the third one. If it makes the third one, that would be brutal. BlackRock is in the similar situation. The 15-day frame is strongly bearish. The 8-day tomorrow, we already discussed it in the previous slide. Wells Fargo, Citi, all have very strong bearish closure. Wells Fargo formed a tower top, and the Citigroup also formed a tower top on the 15-day frame. So I would say that after these frames, the monthly bearish closure is almost guaranteed. I'm saying almost because there is always a chance for the bulls to reverse the situation. But right now it is tracking for a very, very bearish closure. We haven't seen this so for many years, and some of them are even unique. That's the financial sector, and if you're deep into finance, you can have a look at our video, watch our video that we posted on Saturday about financial sector, and we were doing deep dive there into Goldman Sachs and BlackRock from multiple angles. Now let's have a look at Palantir, and we will start with this beautiful chart. So in January, when Palantir was 78, we issued a big warning saying that Palantir is very close to topping with potentially for wave 3, and after that it will be a decline. Nobody listened, obviously, because this was a darling at the time. And now another warning, a big one, on February 8, when we said this looks like a top. Now we would be looking for the move down, and nobody listened again. Now, after February 8, Palantir made just a little higher high and moved down, and it already lost 40% peak to through. So, and we haven't adjusted the chart yet, so this is the same as we discussed at the beginning of February. It's been over a month. So now what we are seeing for Palantir is quite interesting. First of all, the big candles. This is the 10-day frame, which will be closing on Monday, and the chances that this big red candle won't be cancelled or negated. So we might see some potential moves here, something like this, maybe for 10 or 20 days, and then I would expect it to move lower. The key would be a monthly closure. We have a very strong bearish hammer here. However, it requires a confirmation. If this current candle, March candle, transfers or forms a bearish engulfing for this hammer, it would be a very, very strong bearish move. And what I'd like to say that it looks like this wave down that Palantir formed has been impulsive, and I would like to have a look at it together. So what this is the chart, 1 hour chart of the top for Palantir. If we look at this wave, it looks like this is a beautiful impulsive wave. This is wave 1, wave 2, wave 3, very great flat for wave 4, ideal one, and this is wave 5. So far, everything looks perfect. Each of these waves can be, I mean, the impulsive wave, wave 1, wave 3, or wave 5, can be broken into an impulse into 5 waves each, and I would say that this impulse is probably complete. We can put some numbers here to number the wave, and this is wave 5. What this would be wave 1 of higher degree. And what would be looking now is the wave upward. What we are seeing here is a corrective wave. I would say it's quite different. If you look at this wave, for example, this wave and that wave, they are different by character. So this is a clearly impulsive wave, and this one is clearly corrective wave. If you look into smaller frame, for example, like 15-minute, you can see numerous overlaps here. And even if you consider, for example, let's say this is wave 1, right? This could be wave 1, this could be wave 2, wave 3, wave 4, and potentially wave 5. Unfortunately, this count wouldn't work because of this overlap. And thus this makes this invalidates an impulsive structure, and the wave 3 itself inside is not impulsive either. So too many overlaps of a major wave. So it's most likely an ABC formation of some sort. So considering this, now we would be looking for a corrective action here. And I'd like to make it a little smaller. So what kind of waves could happen here? And now let's strategize. So this is possibility. First of all, this wave is quite long, and we would be looking for an ABC formation. So perhaps something like this could be an ABC. I'm not saying this doesn't look like a zigzag at this moment. So I would be looking for a flat formation, something like this. And in our case, the target would be about 50 or 62% of the length of wave 1. So the most typical target would be somewhere here. This is inverted Fibonacci. So this is 382, but it is 618 because of it inverted. Okay, let me invert it. Reverse. Okay, so now that nobody is confused. So this is potential target for this wave. It could be of different structure. It could be something like this, for example, and the stronger wave C. But nevertheless, the most important thing that this wave looks corrective so far. And we would be looking for a move lower. If this wave doesn't move very high and we would see a reversal here moving down, then another perspective is to look at this potential target. So this would be wave 1, 2, this could be wave 3, this would be wave 4, and possibly wave 5 here. So that's another possibility, and it is remaining on the table. We are watching it, and we'll see how it develops. Well, now let's move on. So this is what we see for Palantir, and just to reiterate, this is the long-term perspective. If we see this wave completes as wave 1 or A, then we might see a little bounce here and another wave down to complete wave 4. And that would totally make sense, especially if it stays within this large channel. Wave 1 was almost horizontal and took 2 years to develop. This would be a very sharp zigzag type. Now let's finish with Palantir and move to Google. What we are seeing for Google, first of all, I would like to say something about this chart. We alerted way back in February that Google is about to form a diagonal and the chances that it is moving down. So far, this target has been hit precisely between 178 and 160, and I would like to change for a bigger chart. Now what we are seeing here is the potential for an impulse, similar to what Palantir did. So this is an impulsive wave structure, and we potentially seeing an ABC formation here, or it could be even an impulse of a higher degree. So if this is wave 1, wave 2, 3, 4, and 5, something like this. At this point, it is not clear what will be happening, and let's analyze the candles and see what candles are telling us. This is the weekly chart in the middle. Google formed a very strong bearish candles, and last week it formed a Harami candle on the weekly frame. Potentially, it could be a reversal candle. Let's see how it develops further. So far, this the 8 and 20 EMA weekly moving averages, they crossed in a bearish cross, and the technicals are supporting a move lower. And Google continues to build big bearish candles. This is the 15-day frame, which closed yesterday, and we have a very strong bearish candle. If we look at the 10-day frame, it also has two black crowns, and potentially on Monday it might form another one. If it forms 3 black crowns here on a 10-day frame, which is double the size of the weekly, I would be very, very concerned. And the final chart here is the micro chart that we've been tracking since March the 2nd. What we are seeing here, I think that this could be wave 3, and now Google is forming possibly wave 4. That's the perspective. If it reverses soon, I would say it can go higher and find resistance here somewhere around, oh, the wrong element. If it finds resistance here in the area of wave 4 of a lower degree and then moves down, we would be looking for a bigger impulse here. So that's the perspective for Google. Well, today's deep dive into BlackRock, Palantir, and Google uncovered critical signals. While some reversal signs are emerging, the technicals still lean bearish. We will see a breakout or just a dead cat bounce, we don't know. BlackRock, institutional shifts in play, confirmation needed for turnaround. Palantir, no clear bottom, next move could be explosive. And Google struggling at key levels. Will buyers eventually step in or let it slide further? What is your take? Are these stocks gearing up for the comeback, or is the downtrend just getting started? Comment below with your thoughts. We truly appreciate it. Markets are moving fast and we are tracking every signal. Stay tuned for the next Stocks in Motion update. Don't forget to like, share, and subscribe so you never miss a key move. And as always, happy trading.